Bank of America made it four. Four of the biggest U.S. banks have already reported earnings now, all this week. Joining us to discuss the state of Wall Street and what really it all means for the U.S. economy is Harvard professor, noted historian, Niall Ferguson. Neil, we're very glad to have you here. Let's talk, though, about the profit picture. Healthy profits, really, from J.P. Morgan, Goldman Sachs, even Citigroup made money. Should we gain any confidence from all this?
Well, it's hard not to make money when you can borrow basically for free. That's what the Fed is allowing. And there is some recovery in the economy. I mean, this is not exactly an extraordinarily difficult situation for banks to be in. And best of all, these banks are guaranteed by government. They are implicitly too big to fail. And in that sense, they enjoy almost all the privileges of what we used to call government-sponsored entities.
So would you call them false profits?
I wouldn't call them false profits. I just think it seems like a bad basis to say the problems are over. Because after all, if you drill down even in J.P. Morgan Chase figures, there's a growing problem in consumer credit. That is not over. And then if you go down a tier and look at the smaller banks, which nobody pays any attention to, it's a disaster. I mean, smaller banks have huge commercial real estate exposure. Anything up to 1,000 of those could fail in the course of the next 6 to 12 months. So the idea that the financial crisis is over seems to me to be a fantasy. And actually, these Bank of America numbers look like they bear that out. It's clearly not over for Bank of America.
Okay, but let's say that you're right and we are living in this fantastical world. What do we do about it? Too big to fail. You've written about it extensively. It is a problem. Even the bank CEOs themselves, Jamie Dimon included, Lloyd Blankfein included, acknowledge that. But how do we address that now? Or are you writing about it now? Or are you raising the alarm because something needs to be done about it sooner rather than later?
Well, if you think about what caused this crisis, part of what caused it was excessive concentration of the financial sector, maybe 10 firms accounting for 50% of assets in the U.S., and excessive leverage. The problem is now, in many ways, worse, at least in the case of number one. That is to say, we have a really tiny number of giant firms that dominate the financial system, the survivors, the ones who didn't disappear. And the problem is that they are now almost the Fannie Mae, Freddie Macs of our time. They're government-sponsored entities. They've either had capital injections for government, some of which have been repaid, or they are trading implicitly on a government guarantee. And my argument is that that's not healthy. That is not good for American capitalism, and we need to start weaning the banking system off that implicit guarantee. It can't be right for these giant financial institutions to be making profits when things recover, but when things go wrong, the taxpayer is still on the hook. That's deeply unhealthy.
Do you see the liquidity that is helping those banks generate these profits leaking into the asset markets as well? Are you among those who sees a bubble forming?
Well, I wouldn't call this a bubble. I think this is a case of money illusion, because almost all the appreciation of the U.S. stock market right now is counteracted by dollar depreciation. I mean, this is really a dollar slide story, where just as in the 1970s, America says to the rest of the world, our currency, your problem. And this recovery that we're seeing in the United States is increasingly a recovery driven by dollar depreciation, which I think will continue over the next 6 to 12 months. I think we've got another 10, 20% depreciation on the dollar. The pressure that is going to put on, say, the German economy, to say nothing of the Japanese economy, is really, really serious. If you view this as a global situation, rather than just parochially as an American recovery, you see that it's kind of an illusory recovery. Certainly from the vantage point of a foreign investor, this is not impressive at all.
Because if you translate it into another currency,
right,
the percentage of gains in the stock market are much, much smaller.
Or Erik, if you think in gold terms, as some very traditionalist investors do, this is no way a recovery. In many ways, we're still in one of the deepest holes that U.S. equities have ever been in.